Welcome back to BestProp4U. Gold is trading higher today and it's being driven entirely by, of course, the US and Iran reaching a preliminary peace agreement. The deal includes an immediate halt to hostilities and the reopening of the Strait of Hormuz to international shipping because, of course, this reduces the threat of supply chain disruptions. Oil prices have plummeted. Consequently, falling oil prices ease inflation fears, which then cools bets that the Fed will have to hike interest rates further. And importantly, though, we have a catalyst, okay, as well. Tomorrow, we have the FOMC. So we really have to be careful on how we trade this. Lower rate hike expectations are great for gold. And if these are also substantiated tomorrow by the new Fed, which is going to be his first Fed meeting, then we are likely going to see out playing on the charts what I've been looking here on the weekly chart. And what we are looking here, of course, on the weekly chart is that we have a flatness of the Bollinger Bands, and we do have a pin bar that was last week and actually moving higher this week. Again, we're looking at the weekly, and for context, what I want to also do here is just to let you know that, of course, prices don't always follow the same pattern. But if we looked at the last time we had a similar correction, okay, what happened is actually we are currently here. Okay, so there is more room to the upside. Let me explain. This is essentially the same structure as we saw back then. You see, first correction, 2, 3 legs, and essentially what might happen next is something like this. Go up, and then actually, let's follow that from there to there. Essentially, what could happen is, this, by the way, is a fractal, guys, okay? What could happen essentially is that we might see something like this playing out. So we would eventually come all the way up to 5K and then drop once again. This is a correction. It's a flag-like correction. Okay, flag-like correction, but of course, and that is why it's important, without breaking the upper band, then it's highly unlikely that we're going to see this actually turning into a potential reversal point. So this is on the weekly, and we looked at the fractal. For the fractals, we have a good chance here of moving not just up to 4,700, which is the middle Bollinger Band, but if we break 4,800, 900, let's say, then even all the way up to 5,280, perhaps new record territories. Obviously, we do see the two pin bars here, yeah. They both, this one led to upside, but we've fallen. So if this also leads to upside, but we fail to cross above any of these levels, 4,900 and 4,700, then most likely we're going to go lower down. And if that was the scenario, of course, we'll be looking for a complex correction, and we'll be looking to go and revisit 3,980, perhaps even 3,412, according to Fibonacci estimations. However, we do have a very strong support at 3,900 first to take into consideration, as well as the 4,000 psychological support. Now, on the daily, of course, and before we go there, let's just print that level over here, because it's going to be, might be important. And the other one is down here. On the daily chart, we do see this flashing lower down for stop losses, of course. Took them out and started to bounce. It could be considered as a double bottom over here, okay? Because we are looking at 4,100 as support. We broke below that. That is considered a false break, okay? And what could essentially happen next is that once we do break above 4,440, which is the medium band, then we could go all the way up to 4,700 plus, which is exactly where we've actually drawn resistance, and this matches the upper Bollinger Band on the daily chart. A very important level to take into consideration. Okay, unfortunately, we don't see any divergence on the RSI. Okay, and this is important for context. But what we do see 1, 2, 3, 4 touches. That one failed. Okay, so if we manage to stay above 4,100 and above 3,885. So we could see another flash if we fail to break above 4,700. We could see another flash. Then we might be looking at a rejection at the lower channel, which is quite of a bearish scenario, to be fair. But as we are here on the daily, now we're going to go down on the 4 hour to see if we have any signals actually that give us any particular technical clarity. And we're going to add this resistance level, previous record high as well, important level, close to where we came yesterday, very close to the middle Bollinger Band on the daily chart. And let's look what's going on the 4 hour chart. On the 4 hour chart, as you see, we have had a very impressive move to the upside. And the gap, opening gap also here with driver being the news of the US-Iran deal. Now, what is important here on the 4 hour is that the median and the upper Bollinger Band are looking up and the bottom one is flattening. Typically when that happens, we see a tilting also of the lower band. That means a new trend might be actually in play. If, and I repeat, that's a big if, we do break higher, we could go all the way up to 4,400. Okay, that will be the very short-term target, which is the 100 Fibonacci extension of the net distance between waves 1 and 4. Okay, above that, we look at 445 and then 4537. What is important to mention here, however, is that so far, and looking at the leg from up 4,890 all the way down to 4,000, we haven't really managed to break above the 38 Fibonacci retracement. Only if we break above the 50, which is at 4,450, then we might see this shifting, reclaiming the 61.8 of 4,460, and then, of course, the double resistance over here at 4,700 plus. This is the important levels, these important levels that we need to pay attention to. Now, something important, the RSI has yet to reach overbought territories. This means that there is room for further upside. And this upside, given the distance that we have to the overbought territory at 70, could let us extend up to around 4,400, where we might see an initial correction. Essentially, what would that be looking like? It would be something like this, with an extended fifth wave, which is typical in commodities. And then we'll be looking for a correction. So this is more of a medium-term opportunity, to be fair, but we'll be looking to buy the dip in this particular case. We have a 5-wave structure to the upside, which is an impulse. So the chances of continuing higher for one more leg anyway are high. The question is, when are we going to pull back and how much we're going to pull back for? So trade safe and keep these levels on your watch list.